Hey everyone, this is Kirk here again at Option Alpha. I want to do something a little bit different on this video because I was just going to go through the process of updating the Honeybadger template, and I decided instead of just updating it and publishing it to the community, I'm going to record this video, just show you guys what I'm doing in this process. I guess just record the whole process of updating the template. This hasn't been one that we've updated in, it's been like almost a year that we've updated this one, so it's been quite a long time here for like a real big update to the Honeybadger, but there's a lot of new things that we have in the platform, so I'm going to update it and record the whole process for you. I hope you enjoy it. I hope you, if nothing else, it just shows you the process of updating it. Maybe I'll talk through some of the ideas and thought processes. I have no idea how long it's going to be. I've not scripted this. I don't know what I'm going to do to the template. I'm just going to look at the old template, update it to some of the new stuff that we do, maybe add some new decisions or recipes or tags or whatever. So I hope you enjoy this video. Not sure again how long it is, but if you do, let me know. If you have questions, let me know in the comments or chat. And then also if you have any other ideas or templates you want to share that are related to these, please let us know. Drop them in the community. Okay, so here I am inside of the Honeybadger template. So this is the old template, the original template. So version 1 was shared back in 2021. Then we did update it in July. We kind of added some VIX values under there. Not too much included in that. So the first version was kind of the main one, July. We added some VIX values when we added the VIX filter. And then we updated it in December of 2022. But the only little update there was just to remove an unused automation. So really wasn't a big thing at all. So it was just like a little update. So we really haven't updated this one in quite some time. So here's the concept with the Honeybadger. The Honeybadger concept is basically an idea around trading anything that happens in the market in any direction. So the idea from Honeybadger came with like the Honeybadger just doesn't care what's going on or what the conditions are. The Honeybadger is just going to make a trade in the underlying security. You know, there's going to be some opportunity filters. It's going to be checking for liquidity, checking for appropriate spread pricing on positions, right? So it's not just going to be completely blindly trading, but the idea was that it's going to be trading any direction at any time based on just whatever the market conditions are. So in this case, it could trade a short call spread, it could trade a short put spread, which is bullish, it could trade an iron condor, which is neutral. So basically, if there's conditions that are available, that the Honeybadger would trade a short call spread. So if the market was looking like it was going to be set up to be a little bit bearish, so I'll just write out bearish, then it would trade a short call spread on that particular ticker symbol. If the market looked like it was going to set up to be a little bit bullish, so it wasn't bearish, and maybe the technicals or whatever you were using were set up and it looks like it was a bullish signal or a bullish market, whatever you want to define it, then it would trade a short put spread. So an out of the money short put spread, and it would do that. And then if nothing else and neither of those two were true, then the market was just going to be neutral. Then it would trade just a neutral wide iron condor. So if it wasn't specifically bullish, wasn't specifically bearish, then it was going to trade a neutral position. So that's why we named it the Honeybadger. It's just because it doesn't really care. It doesn't have an opinion. It's just going to trade on the technicals, trade on whatever signals or settings you set up. So that's basically how the scanner worked. Now in this case, the scanner could have entered 3 different types of positions inside of the one scanner. So we had the call spread, we had the put spread, and then we had the iron condor. So just remember that as we kind of go through this process. And then because we had those 3 types of positions, we added 3 different types of monitors. So we had a call spread monitor, a call spread manager, a put spread manager, and then we also added an iron condor manager as well. So you could have added all these into one monitor automation. We broke them out into different ones so that they were each specific to each type. I think when we redo this version now, we'll kind of condense those down to the critical ones. If we need any critical ones, I probably think we can get rid of 2 of them if we needed to. And then we added just a couple buttons, a couple of fun little profit-taking buttons that show up on the bot dashboard just to show you how buttons work, where you can run a button, click a button, run an automation, take some profits on something. So we added some profit-taking buttons here. So again, you can keep those, throw those away. It doesn't really matter. I don't think we'll really touch them too much. So this is the current version as it stands right now. The current version also has no bot level inputs. So there's no bot level inputs on this thing. All the inputs are kind of wrapped up into the individual scanner automation and any monitor automations that you have. So we didn't pull those into the bot level input, but I think we're going to do that at this stage because pulling those over just makes it a lot easier under the new framework. So this is the Honeybadger. I've already renamed this V3. The way that I like to do it when I go through and update new templates is I'll just clone the existing template as is, or whatever version I'm currently running. I'll create a new version just called V3, which is the third version of this, obviously. I guess the real third version of this, right? So it's actually going to be the fourth version, but I don't know. We'll call it V3, V4, whatever version you want. And then what I do is I start working from this. Now, again, you'll notice down here, we don't have any bot level inputs. And the way that Option Alpha is kind of set up now is that bot level inputs are super easy to adjust. And so what we're going to do is we're going to pull all of the inputs to the bot level so that we can adjust these for individual tickers as we go. Last thing that I'll say about the Honey Badger is that the Honey Badger is designed, the way that I designed it was, because I thought I would use it this way, I think many people would use it this way, is it's designed for one ticker at a time. So very similar if you guys follow the Hexabot. The Honey Badger is set up to do just one ticker at a time. So if you want to trade SPY, you trade one Honey Badger on SPY. The reason I like doing that, and this is just my personal reason, you guys can do whatever you want. Obviously, you can trade multiple symbols in a bot, but the reason I like doing this is because I can control the position sizing, the risk, etc. I can allow it to get into multiple types of positions in the same ticker symbol if I want to. It's just a lot easier to control all the edge case scenarios if you run one symbol in each of your bots. And then you can just spin up new bots and just swap out the ticker symbol, which I can show you how to do maybe at the end of this video. It's actually very easy to do. So if you make this an input, the ticker is an input, you can just simply go ahead and clone the bot up here, go ahead and clone the bot, and then swap the ticker for a new ticker. And you spin up a couple different versions of this, each with their own particular settings. It also does help with things like the bid-ask spread guards, control, again, like I said, controlling position sizing. You could do different profits for different tickers. You could have some that are set up for ETFs versus stocks. So it doesn't matter. You could do it, you can not do it. That's the way I do it. Okay, so now that I've got this in here, I'm going to just work from this bot right here, because at the end of all of the changes that I make, what I'm going to do is I'm going to save this as a template and update the existing template. So once I make all the changes that I want to this bot here, I'll go here to save as a template, and then I'll click update a template. You can see it already recognizes that I probably want to update the Honey Badger template. And so that's what I can do once I'm done with all of my changes. I haven't done any changes yet, but once I'm done, that's what you would do. Just go ahead and save and basically override and update your existing template with the new one, okay? So first thing I'm going to do here is I'm going to actually start working through the monitor automations, because now that we have exit options, which are attached to open position actions, and you can manage positions every 1 minute, I probably don't need these monitor automations, or I probably don't need all of these monitor automations. So I'll start with the short put spread one, which is here. You can see this one is repeating through each short put spread position, checking to see if the premium went down by 50%, and then also it's using a bid-ask spread guard in here before sending the closed position action over to my broker. So in this case, what we did before, and this was years ago because we didn't have the bid-ask spread guard in place, what I was checking for here was checking for a profit, and I was making sure that the bid-ask spread was less than a certain amount. And it was just arbitrarily doing that because I wanted to make sure that the spreads were not, ridiculously wide at some point during the day, and that was causing mid-price to go one direction versus another direction and create basically like a false positive, false, profit that wasn't really there. It's just there because the mid-price kind of shifted that direction. So we don't need these anymore because these like generic profit taking and expires in less than 2 days, right? So here was the other one. We were just checking to see if the position expired in less than 2 days. And again, we have this kind of bid-ask spread guard that we put in here. All of this now is taken care of with exit options. So we don't need this automation anymore inside of the bot. Now, in this case, we could just go ahead and delete all of these things one by one. That doesn't really help. All we need to do is just simply remove this automation completely. We don't even need it. So we don't need the put spread manager. We can manage all put spread positions totally independent of each other and do that someplace else. Same thing with the call spread manager. Call spread manager was set up exactly the same, just in reverse. So it was checking to see if the position was gone down by 50% or 3 or 2 days or whatever. Doesn't matter what you put in here as these settings, but we don't need these anymore. This is a very generic now, with the new updates that we have, very generic way to manage positions, and monitor automations are really for your more complex things that you want to do, like challenged exits or hedging or reversals in signals or technicals. Like things that you don't need to do your standard profit taking, stop loss, etc. So in this case, I'm going to go ahead and remove the call spread manager as well. Don't need the call spread manager. Okay, so what that leaves us with is an Iron Condor manager. The Iron Condor manager here is a little bit different because what it's doing here is it's checking for a number of things like position expires in a certain time period, and then it has these near-term exit options, etc. So it's doing a lot more checks, obviously, than the last one. But we can start to remove some of these things if we want to. So I just want to kind of go through these, and we'll think about these together. I'm just talking these out as I go through them myself here, because I don't know if we necessarily need to have all these or not. It's up to you if you do. First thing that you do here, and I'll just collapse this down so you can see it. The first thing I'm doing here is I'm checking to see if the VIX is below 30. Now, the real idea around checking to see if the VIX is below 30 is just to avoid managing any positions if you're in a high volatility environment. But the second level or second order effects of that is that if I'm in a high volatility environment, that probably means that the bid-ask spreads are really wide. And now we can protect from that using bid-ask spread guards inside of the exit options. So unless you absolutely want to have some sort of other protection in place for VIX levels, you could put that in here for your monitor automations, but still wouldn't even impact your exit options if you're running those. So I don't think we actually need this here. It was kind of a let's get ahead of the curve where if VIX is really high, then we stop managing positions. But really what we're trying to protect from is just widespread markets where we just want to ignore widespread markets or not send any closing orders if the markets go really wide. Because if volatility is high, but the position comes back into our range, we would still want to close the position. This might stop us from doing that. So I'm going to go ahead and delete this one, delete this action, which just rolls up the other actions. And so now all it's doing is it's repeating through each Iron Condor position. Okay, now what it's doing here is it's making a set of decisions. First decision that it makes is, does the position expire in less than our expires in threshold, which is just an input. So that's just an input to say, hey, there's this level at which we think that the position might expire in less than these number of days. Maybe it's 3 days, 5 days, whatever it is. And if it does expire in less than that amount of time, what we wanted to do is we wanted to essentially adjust our profit target to something called a near expiration profit target. So if the position, let's say, expired, and I'll just use an example number. Let's say it expires in 3 days. Well, did we still want to shoot for a 50% profit, or maybe would we be willing to accept, let's say, a 25% profit? And so what you could have the bot do is you could have the bot, when it's closer to expiration, adjust the profit target down to a near term or a near expiration profit target. So follow along here. It's if the position expires in less than whatever the expiration threshold is, yes, it does expire soon, whatever we define as soon. Then does the position's premium, did it decrease by our near-term profit target? Maybe it's 25% or something like that. And if it did, then go ahead and close the position out. Yes, close the position out, etc. If it didn't expire in less than that near-term expiration target, then check for our absolute profit target. And if it didn't reach our absolute profit target, maybe that was something higher. Maybe that was something like, I don't know what it was. I'll check, but maybe it's something like 80%. If it didn't reach its absolute profit target, then check and see if the position has been hit by a trailing stop. And what we used to do is we used to set these here inside the monitor automation. Now you still can. You can set them here, use them regularly inside your monitors, add more monitors to your bots. It doesn't matter. But in our case, we don't need either of these. We can set these with exit options for Iron Condor positions. So we can actually delete both the yes and the no path. Notice that when I go here, I can just go ahead and delete this whole branch. I could keep the yes path, keep the no path, or I delete both. I don't need either of these, so we're going to delete the whole thing. So that really simplifies this down. Notice on the left-hand side now we have some unused inputs, so we're going to go ahead and delete those. We don't need an absolute profit target now. We don't need a stop trail or smart stop trail. We don't need those. Okay, next thing we're going to do here is we can leave this in place for now, and I'll maybe come back to it, but we can check for a near-term expiration profit, but instead of doing this, what I want to do is update exit options. I don't want to do that yet because I haven't really introduced in this video exit options to begin with. So let's just save it for now, and we'll come back to this Iron Condor Manager, and we'll call this one, let's say like editing, something like that, just so we know that we're kind of in the process of editing this one. Okay, so here we are back here. So let's go now to the scanner automation. And again, if you're following along in this video, I'm not scripting it. I'm literally updating it like I would in some of the bot templates and just kind of showing you how we go, okay? So inside this scanner automation, again, this is set up for one ticker. We have basically a number of things that we're trying to do. So what we're trying to do here is we're trying to find out if this potential trading opportunity that we're looking at, is it a bullish opportunity, bearish opportunity, or neutral opportunity. So that's how we kind of have these decision recipes set up. First thing that we're checking at the top is the ticker's 14-day RSI above a high RSI level and the CCI above a high CCI level. Now, I don't care if you set up these with one technical indicator, with two, with five, whatever. This is basically your whole storage unit. This one decision recipe here is telling you, is the market set up for a bearish position? So all of this is set up for a bearish position. Now, we didn't have this when we first released this, but now we have the ability to exit or to update the caption that it's used here. So what I'm going to do now is I'm going to delete this whole caption, which is just the standard verbiage. I'm going to say something more specific like, is there a bearish trading opportunity? That's it. I mean, you could say whatever you want. Doesn't matter. So now I'm just going to update that caption. That makes it a lot simpler for me to understand, for you guys to understand if you guys clone this template. So now what you can see is there a bearish trading opportunity? Yes. Okay, do this. No, do this. And we'll keep going down as we go. Okay. Now again, inside of here, you're going to add all of your criteria, whatever it is for you that would determine that this is a bearish trading opportunity. So let me just add a note here to this step. Inside this decision group, you'll add all the criteria or market conditions that would suggest a bearish oversold, or maybe, sorry, overbought trading opportunity. Okay, so that's what you would do, is you would add all of that in here inside of one group decision. So you could say something like this. This is what I did in this one. The ticker is 14-day RSI using an intraday reading. So right at the time that it's trading right now is above the high RSI level that I set. Basically, that means like, is the ticker's 14-day RSI, maybe the reading is at 75 and the high level that I set, it's got to be over 70. So basically, is RSI high? If it is, are we also seeing, using the and statement, and is the 14-day CCI also above a high RSI reading? Now, if you want to, you could switch those to an or statement. So it could be either or, like one of these technical signals has to be overdone. You could do multiple things, like add a bunch of other indicators like IV rank is high, or other indicators like Bollinger Bands or MACD or stochastics or whatever. You could add whatever you want inside of here because it doesn't really matter. It's just like, what are all the criteria that tell you that it's a bearish trading opportunity? And so once you add those, then you're good to go, okay? So I'll just leave those here as just RSI and CCI. If both of those to me are overbought and above the high level, then that's two technical indicators I like to use that suggests that I can tilt the trade from neutral to bearish. Now, I don't want to do an iron condor in these situations. I would rather do some sort of bearish trading opportunity, sell an out of the money position, etc. Okay. Next thing I'm going to do here is I'm going to go in and I'm actually going to adjust the open position for the short call spread. So first I'm going to adjust the caption here just to make it a little bit simpler. We're just going to open a short call spread. And in here, this is where we're going to tell the bot the exact position that we want to get into. So this is where we tell it, look, if we ever get to this step, and I know I skipped over this one for a second, I'll come back to it. But if we ever get to this step right here, then I want to open this exact position. This is exactly how I want to open it. I want to open in the same ticker that I'm using for everything. So one ticker, one bot. I want to open an expiration 30 days using monthly contracts only. Again, you can change that to be whatever you want. I want to do the short call at a 30 delta, the long call at a 10 delta. You could do dollars above and below the different legs if you wanted to. And you could do position sizing. You could say, look, I want to do up to $700 of risk. So if the 30 delta and the 5 delta or the 10 delta ended up being, $200 of max risk, I could do, maybe 3 positions, right? So up to $700 of risk. I could probably cut this down to something a little bit more simple, like one contract, and then you could control it just a little bit better and do one contract on these. And that would just make it universal for everything. But if you want to adjust the position under this Honey Badger version, you just come in here and make the adjustments to the type of position you want to do. Now, what I'll probably do, and I'm thinking about doing it right now, but I'll do it maybe in another video or later, is do like a Honey Badger, maybe a more advanced version, which takes all of these and turns these into bot level inputs so that you can adjust your position one place and one place only. But I won't do that now. So if you do want to adjust it, because there's only one open position action, you just adjust it in here. The next thing I'm going to do is I'm going to set the pricing. This is basically how you want Smart Pricing to send orders to open the price. Now, if you remember what we did before is we tried to basically ensure that the bid-ask spread was narrow before sending the order over. But now what we can do with these final pricing and slippage guards inside of Smart Pricing is we can just set our maximum slippage that we are allowing the Honey Badger to get to right here inside of pricing. So in this case, I can say, look, I will allow 4 cents of slippage from the mid price. So it's not that it's going to just go right there. It's going to try multiple prices like it always does. It'll try to work through the bid-ask spread. If the spread's wide, it'll try wider prices. But you're basically just telling the bot, like, look, I will allow you to go up to 4 cents from the mid price. Now, you could still use 100% of the bid-ask spread, but the problem with doing that, it's not a problem, but you just have to recognize that this is what it is. If the bid-ask spread randomly during the day goes from 0.00, which it can for illiquid securities, to $1, right? And the bid-ask spread goes from 0 to $1, well, 100% means you could get into it on either of these ranges. It's just going to be basically like almost acting like a market order. So you can control that by doing stuff like 50% of the bid-ask spread, which is what a lot of people do, or you can use slippage from the mid. So you can set an exact penny amount of slippage from the mid. So that's what I'll do here. I'll say, you can do 4 cents slippage from the mid. So if mid price is 50 cents, then you can go down to 46 cents. Like that's the most you could go down to for opening a position. Okay, so I'll set that. Last thing I'll do here is I'll set exit options. So exit options for this position, this is where you can set exactly how you want the position to be managed. So remember, exit options run every minute that the position is opened. And basically, if any of these criteria are met, it would close the position. So if you have a profit taking, it'll close. If you hit a trailing stop, it'll close. A stop loss, expiration, earnings, et cetera, all the way down. So I want to set some exit options. This time, what I want to do, though, is I want to convert the exit options into an input. The reason I want to use an input is because I want to set exit options once for different types of positions. And then I want to be able to adjust those into different exit options later on. So I'm going to set those as an input in this case. So I'm going to add an input to this, which means I don't want to set it here. I could set it right here. I could just go through and set it and save it. But instead, I'm going to add it as an input and then set some default value. So I'll say choose how you want the position to be managed for any exit options. You can type whatever descriptive text you want under there. And then I'll set some default value. So in this case, because it's a short position, I can basically set it to whatever I want. So I'll do this. I'll set it as 50%. No, I'll set it a little bit higher. So let's set it as 75% of credit. That's going to be my profit-taking level. What we used to call in this video, if you go back a little bit, there used to be something in the monitors that was an absolute profit-taking level. That's essentially what this is. I mean, if at any point this thing gets to a 75% profit, we're going to close the position. So if it ever gets there, it's going to close at the 75% of credit. So if we sold a credit spread for $1 and it gets down in value to 25 cents, we're going to start sending orders and try to close the position. So we can still try different settings of Smart Pricing if we want to, but remember, it's always going to lock in that profit on the last price, that final price, okay? So that's good. Next thing we can do is we can set a trailing stop. This is what we had in the original one, which was these smart stops. You used to build them into your monitors. You still can, but now you can set them in exit options. So we could activate a trailing stop at 50% of credit, which once it reaches that 50% of credit, it'll start monitoring the position like a trailing stop. It doesn't do it right away because it's got to reach that target or that activation level of 50% first. So this is how we can kind of ensure that once it reaches a, kind of a matured profit point, we're starting to trail it and starting to ensure that we try to keep the position intact, okay? So I'll go ahead and use a 50% target and then trail it by 10% pullback. And then whenever it gets triggered for a trailing stop, and again, this is just specific to the trailing stop settings, if it ever triggers a trailing stop, I want it to use fast smart pricing, because it probably, if it's hitting a 50% profit or 60 and then it's pulled back more than 10%, I want orders to go over faster. You can still use normal, and maybe in some cases I would, or patient, whatever. But in this case, let's just use fast, which means try less prices quicker, because I want to get out of the position. And I still, in this case, can use slippage from the mid. So this would protect me in case the markets get really, really wide or just go abnormally wide, which might trigger it. I don't want to do that. I want to protect myself from slippage from the mid at 4 cents. So try a bunch of prices, but no more than 4 cents from the mid. So that sets my pricing, or how orders go over for the trailing stop. I'm not going to use a stop loss in this case. You can if you want to. That would be another way that you could choose to exit positions if you want to. I'm not going to use an expiration, or I'm not going to use an earnings, because I'm not going to trade earnings with the Honey Badger. If you do, you'll want to set those earnings here. And I will use an expiration target. So I'll say close this thing 2 hours before expiration. So if the position doesn't work out, again, all other things being equal, if it never hits a profit taking, never hits a trailing stop, close the position 2 hours before expiration. Again, go ahead and use slippage from the mid at 4 cents. We can just use normal smart pricing at that point if we needed to. Okay, last thing that I'm going to set here is I'm going to set to disable exit options if the bid-ask spread ever exceeds a certain amount. So what this basically does is this makes sure that if there's really volatile times in the market, then what we want to do is we don't want to track those abnormal highs and lows. So if the spread just temporarily goes crazy banana wide, we don't want to track that high and low to create an order that might get sent over to our broker that isn't really realistic. It's just like an abnormality. And this happens. We did a lot of research on this. We posted it to the blog all the time during the day. Even for the most liquid products, you get bid-ask spreads that just widen out for no particular reason or no rhyme or reason. And so we can disable them if the bid-ask spread ever goes insanely wide. So what I usually do is, like some of the more liquid ones like SPY, you might do 10 or 20 cents. You're just trying to get the edge case scenarios out of here. So if the markets go super wide during a high volatility event, then you don't want exit options to work for anything. Profit taking, stop loss, trailing stops, no targeting, no tracking of the high and low, nothing during really wide events. And so again, it's not that you want to set it at the perfect level. Like 10 doesn't necessarily mean it's better than 20, or 15 better than 10. It's just you're trying to curb the really wide ranges. And this is why I think this is important that you set up one Honey Badger for each ticker, because you can kind of customize this. Tesla might be different than SPY or GLD or something like that, okay? And then what I'll do here is I'll save these presets so that I can reuse them. And I can say short, spread, and I can say it's something like Honey Badger, Badger settings. Okay, so if I can save these as a preset, I can reuse them here in a second. Makes it a lot easier just to re-add them. Okay, so I save those as the default value. Now, here's the thing, right? These are the default values for these settings. So because I'm adding this new input, I can choose what the default values are. These are the default values. I can change it at any time, but the second that I add this to the bot, these are the new settings that will be used when I save the scanner automation. So those are the new settings that will be used. They'll be the default settings for any other bot that I create, unless I override them, unless I change them to new defaults. So set them exactly how you want for these for these exit options, which makes it really simple, okay? So once I do that, I save it, and now you can see those exit options are set here as an input. So for the short call spread, we'll just use whatever settings I used for that particular input. So I'm also going to add a tag for this. I'll call it a short call spread. So I can add that. So it'll tag any open positions as a short call spread. And I can also tag it something like the environment that it was in. So overbought environment, whatever I deem as overbought. So I know, and this will help for later on when you do like tracking of your positions or you do reporting, you can, all right, show me all the positions that were tagged as a short call spread and overbought. Like how did those positions do, right? So you can do stuff like that. So we'll go ahead and just update those as well. So I'll save that. That's saved now here to this open position action. Now that I've done that, what I want to do is I want to go back up one level and I want to update these set of decision recipes, which these are basically our opportunity filters. Now, opportunity filters are super cool because what they allow us to do is basically before we got to the point of opening a position, we are going to check for certain things like, is the rate of return greater than our hurdle? Is the short call open interest greater than our minimum amount? Is the bid-ask spread less than what we want? Now we can remove some of these. Maybe we can even add some of these if we wanted to, add to these to improve what we want here. But notice these are all and decisions because they're all filters that we need like certain requirements in order for us to send the order to our broker. So these are all things that we would require before we got to the point of opening a position. So notice what it's doing here is it's having the bot make a decision that follows the yes path. If all of these are true, so if all of those are true, then go ahead and follow the yes path and open up a short call spread position. So if one of those are not true, or some of those are not true, or all of those are not true, don't do anything. It just simply ends the automation. That's fine. It'll check again later, see if the new criteria, maybe there's more liquidity now, maybe there's better pricing, maybe there's whatever, okay? So here's what I'm going to do. I'm going to go ahead and just remove this one, and I'm going to keep these two, but I'm going to update them to the new opportunity that we're looking at. So, because in this case, I don't know if we updated it to the new opportunity, so I'll go ahead and just update it to the new opportunity here, which I think is the same one, but in case you override it, you can just resave it over. And it's going to be risk-reward ratio is greater than my call spread hurdle rate. So what this one does, and I like this one, this ensures that you're collecting enough premium relative to the risk that you're taking on the position, whatever that is for you. So we added an input called a call spread hurdle rate, and that's the rate at which the risk-to-reward ratio we need to collect in order to enter a call spread position. This really ensures that you're not entering call spreads for a penny for a $5 wide spread. Like you're not going to get anything for that, right? So make sure that it has enough premium. You can add more to this if you want to. The other one that we have here is we have one that checks a very specific leg. Notice you can swap these out for other legs too. So we're checking the short call leg of this same opportunity that we're looking at, the same type of position, and checking to see if the open interest is greater than our minimum open interest amount. So again, we want to ensure the short call leg before we even try orders, before we even attempt orders. Does it have enough liquidity, whatever we deem as the open interest, minimum open interest? Notice that this variable here can be swapped out for pretty much anything on this list. You can check out of the money amount, you can check betas, deltas, bid prices, changes, gammas, low prices, whatever, okay? So this is the one that we're going to have. Make sure it's greater than our minimum. And I'm going to add another one this time. So these are good. This is, are we collecting enough premium? Is there some liquidity in there? However we judge it, you can add more to this. I'm going to add another one here. I'm going to scroll down to our, these are opportunity-based recipes. So if you actually see here, these are stock-based recipe, indicator, position-based recipes, and then opportunities. These, again, are metrics before a position is open. It's qualifying metrics. So here's another one that we can add is we can add one to check the probability of profit of this position. So I'll add this recipe here. We'll select the opportunity that we're looking at. This is the short call spread. So it's basically telling the bot, hey, look, pull in this information on this type of position. And then we're going to check the probability of profit and make sure that it's more than a certain amount. Now, we could type in a number here like 70%. But if we ever want to change this, we've got to dig all the way back in here into the automation, and we got to change it here. There's no problem doing that. but we can instead add a new input for this level as well. So what I'm going to do is I'm going to add a new input, and I'm going to call this call spread pop. Call spread pop. And I'll set the default value as 70% probability profit, which kind of makes sense because we're trading as 30 delta on the short call side. So it should be at least 70% probability profit. That's kind of the inverse probability profit for that type of position, but just make sure it's relative. Like, don't set 70% probability of profit for a 50 delta position. Like, it's never going to happen. It's always going to be 50%. Okay, and this is going to be the probability of profit. Probability of profit of short call spread opportunity for entering a new position. Okay, so you guys can see that. So that's going to be the new level that we have here, which is the probability of profit more than our call spread pop, basically. So new input that we added here, the call spread pop. You could add more to it if you want to. So you could even say, like, is the opportunity even available? This is a good one. This one is one we could potentially add even further up inside the decision recipe, but is whatever I'm looking at, is it even available? Because if it's not even available, don't even start, trying to send orders. Like, that's an easy one. You could add that too. You could also add, like, again, bid-ask spreads, particular legs, the mid price below or between a certain value, risk reward ratios. Again, so you can kind of mess around with all these if you wanted to and add more. So I think that's good. That's a good set of them. We want to make sure that we're collecting enough premium. There's liquidity, probability profit's good. The trading opportunities there. This is really helpful, by the way, when you do very specific legs. Like, some people like to do legs and they're like, I want to trade a leg that is exactly $3 below the market. Well, it might not even be available $3 below the market. So you can add that in there to check for that very, very specific trading opportunity. Okay. Oh gosh, and I forgot to save. So here I go. I forgot to save, so I can just add these really quick back. Probability of profit. Since I created the input, those should be there, but I just exited out of it and didn't actually save it. Call spread pop. There we go. And opportunity is available. Same opportunity we've been looking at. So that is there. Okay, good. So now what I'm going to do is I'm going to redo this caption here. Did short call spread pass my opportunity filters? So I'll say something like that. Did the short call spread pass my opportunity filters? Again, makes it really simple. I know exactly what's going on here by editing the caption, which you can do here, or you can just hold shift and then click on it. You can go through here and you can just make these a lot more legible for exactly what you want. Now, we use defaults of whatever the settings are inside that action. But in this case, if you're doing this, you can just set them up and make them custom things that you want, or custom, ways that you want to do stuff, okay? So this one's pretty much set up. I have my short call spread, I have my exit options, changed everything. So now what I'm going to do is I'm going to do essentially the same thing that I did here for the rest of these decisions, okay? So I'll go through this one a little bit quicker. So these ones are, we're going to change this to, is there a bullish trading opportunity? Save that one. These are, we're going to rename this to did the short put spread pass my opportunity filters, not fillers, filters. Did the short put spread pass my opportunity filters? Okay, what are those opportunity filters? Rate of return, great. That's the same as the call spread, just the put spread rate of return. The open interest over the minimum open interest, great. We're going to remove the bid-ask spread filter because we don't need to do that with the bid-ask spread guards now. We're going to add a probability of profit as well. So we're going to look at the short put spread. We're going to add a probability of profit, and we're going to add a new one. Instead of the call spread pop, we're going to add a put spread pop. So we're going to say put spread pop. This just means if you trade different type, like if the call spread's a little bit tighter, the put spread's a little bit further out, you can do whatever you want there. Okay. And we'll edit that caption here in a little bit. But once we're good to go here, we can just save this one. And then we'll also check and make sure it's actually available to trade. So we'll do the short put spread, and we'll save that. Save all of these. These all get saved in here now. So since I did save them, they all get saved in here. We'll edit this to say open the short put spread. Now remember, in here, what we're doing is we're condensing everything down and then adding those exit options and tags. So what I'm going to do here is I'm going to go up to 4 cents from the mid, and I'm going to add exit options, but I'm going to use the same exit options settings that I use for the short call spread because they're still short positions. So I'll just connect that same input. This means I don't have to redo it twice. This is the cool part. Now that same input that I have is being used across multiple positions if I wanted to, right? Really, really simple to do that. And I'll do short put spread. We'll do short put spread, and we'll do oversold conditions so that it's in there. And again, just kind of helps us tag and keep track of things as we go. Save those. So now we have a really clear set of things that are going on, right? Is there a bearish trading opportunity? Yes. Then it's going to start going down the process of entering a short call spread. No, there's no bearish trading opportunity. Okay, great. Is there a bullish trading opportunity? Yes. Okay, start going down the process of entering a short call spread. No. Now it's going to ask, is there a neutral trading opportunity? It doesn't even have to ask, is there a neutral trading opportunity? Now there is a neutral trading opportunity. So now we know that we can go through the decision criteria for did the iron condor pass my opportunity filters? Because at this point, if there's no bullish, no bearish, the only thing left is just the trade neutral. That's why it's a honey badger, it doesn't care, okay? So in this case, I'm going to go here and just edit these. Did the iron condor pass my opportunity filters? So these would be all the things that I would do to enter an iron condor position. So I'm going to open this up. I'm going to remove the bid-ask spread because we can check that inside the open interest. Here we did something a little bit different, just so you know. Because we're trading an iron condor, we checked the short call leg open interest. We also checked the short put leg open interest. That means that on both sides we were checking to make sure that open interest was good before entering this iron condor. That's, again, just how flexible you can be. You can check every single leg, every data point from every leg if you want to, but in this case we were checking open interest of both of those. We also checked the risk reward ratio for the iron condor return hurdle, and we're also going to put in here, we're going to add the probability of profit as well for the iron condor. So in this case, now we're trading at 30 delta on both sides, so it's not going to be as high of a probability of profit. Still should be pretty good, we hope, but probably not as high. You probably maybe have to widen these out if you need to. And so actually, let's go ahead and do that. You know, I'm going to do that right now because I don't want this iron condor to be too narrow. So what I'm going to do is I'm going to widen out this iron condor, just the base version of it, and then I'm going to readjust all those opportunity filters. So the way that I'm going to start this is actually I start with the actual position I want to get into, and I adjust that first. And I'll show you why here in a second. But if you do that, then the bot will recognize, hey, you're trading another type of opportunity. And so in fact, let me just show you on the left-hand side. Right now, it's identified there's 3 different opportunities that you're after right now. There's this iron condor, which is a 30 delta, a put spread at a 30 delta, and a call spread at a 30 delta. As soon as I make changes to this, it's going to recognize that I've got a different opportunity that I might want to connect through here. So in this case, what I want to do is I'm going to widen these out. I'm going to go a little bit wider here on these. Let's go out to around a 20 delta. And on the short put spread side, we'll also go out to around a 20 delta. We'll keep those long legs at a 10 delta, but that should widen out the middle here so we have maybe roughly a 60-65% chance of success on the trade for the inside strikes. So that's the new strikes that I widen out. I kind of made those centers a little bit wider on the iron condor. If you're playing along at home, the regular iron condor might be like this, and the new adjusted iron condor might be a little bit wider like this. Okay, so it might be a little bit wider. All I did was just widen out these short call legs here so that they're a little bit further from the market by going to from 30 to 20. And position sizing the same. For pricing, we'll do the same thing we did for the other ones. We'll give it a little bit of slippage. And then for exit options, because we're using short premium positions, we can still use the exact same exit options for iron condors. That means that we can use one set of exit options for everything we trade for this ticker if we wanted to. It's up to you if you wanted to do that as we go. Okay. And then what we'll do is we'll tag this as an iron condor position, iron condor, and then we'll say neutral. You can say like neutral conditions or neutral market, whatever you want. So I just like to say neutral. And then we'll go ahead and save. So now once I did that, you'll see on the left-hand side, the bot's like, hey, what the heck? You got another potential trading opportunity. That's because this iron condor opportunity is wrapped up here, whereas the other ones are all the decision recipes in here for opportunity filters. So now what I have to do is just I have to strip these out. So I have to just swap these out for the other iron condor. So now I'm not looking at the 30 delta. Nope. Now I'm going to recognize this one. And notice the reason I do this one here first is because now it shows up as recents. So it shows up in the list as a potential trading opportunity. Now I do not want to use this one. It's still connected to some other places. But now I want to select this new one, which is the 20 delta version of it. So I'm going to select that, confirm it, and then you can just go to the end here. I'm going to do this for both of these. Select the 20 delta version, confirm the open interest, and same thing here for the last one. Select the 20 delta open iron condor hurdle for this one, and then you're good. Okay, now the other thing I'm going to do, like I said, is we're going to add a probability of profit. We're going to add it for the new version, which is this 20 delta version. The probability of profit is more than some number. We'll add a new input for iron condor pop, which is going to be pop. And here we want to set it a little bit more, potentially a little bit lower, just depends on your deltas, but because we're doing about 20 delta on either side, we at least want to make sure that its probability of profit is 60%. So we'll set the default at 60%. We can obviously adjust this. You can adjust this in your own version if you want to as you go. And then the last thing we want to do is we want to make sure it's available. So is while we're targeting whatever you use, is that version actually available? So there's a lot of things that we're checking here. This is the coolest thing about this is you can just keep adding to your heart's content and they all get wrapped up into one beautiful little sentence here that says, did it pass my opportunity filters? Did it meet my criteria to get into a new position? So if it did, great. Then it would continue and enter a position. If it didn't, then it would just wait and keep checking at the next interval over and over and over again as you go. Okay? So now that we hit save on those and we've adjusted those, you'll see on the left-hand side that old opportunity that we were trying to replace everything out, we know that it's been successfully removed because it's not showing anymore. The only one that's showing is the 20 delta one. That means that no place do I have it connected to get into that 30 delta position or check the 30 delta position. I've successfully removed it from everything moving forward, okay? And then the last thing I'm going to do here is just remove this and streamline this a lot more. Okay, so this is pretty streamlined. That we've actually really condensed this down to probably the critical few that we need to get into. And the coolest part about this is now the exit options are kind of wrapped up in the open position. So at the same time that we open a position, we're going to attach exit options, which will run faster anyway and essentially accomplish the same thing as everything else. Okay, so I'm going to go ahead and save that. That's the new Honeybadger scanner. You can see because we saved it. Now when we go into the settings here, we still have all of these inputs that we have to confirm for this new setting. You'll notice that some of these new ones are in here, like this one here, which is exit options. That's a new one in here, right? So we want to, confirm those as we go. So actually I see something in here that's still in here that we don't use, which is this one, the bid-ask spread threshold. We actually took that out, so I got to delete that. So what I'll do is I'll go ahead and just save these for now. I'll go back into the automation editor, and you see it's on the left-hand side. I have the inputs reduced or collapsed down on the last time, but you can see now that this one is unused because we removed it from everything. It's unused, so we can just simply delete it. So we'll delete it, check all of our inputs. We got a couple of usages of some of these things. You can see which ones are used and not, and then go ahead and save. If I go back into the settings for the inputs that it's using, then you can see we got the ticker, the high, the low, low CCI, covered call return, open interest minimum, put spread, iron condor return, our exit options. Again, these are the default settings, the call spread pop, the put spread pop, and the iron condor pop before entering a new position. So we'll just copy this text so we can reuse it. So all of these are here. We got all of our settings that we would want to use for these positions, okay? If you want to copy that text over, you can add it to the other ones in there so you can keep them a little bit more clear, but it's up to you. So I'll go ahead and do that. I promise you guys I'm going to do it just like I do it before. So the way that you edit those inputs or edit those contents is just go into the automation, go over here to the edit the inputs button. And then what we can do is we can go down here and you can see this one has some text to it. So we're going to add this similar text, but adjust these to make it a little bit more specific to iron condors. Probably profit of iron condor opportunity before entering a new position. Okay, good. We'll do that. Go ahead and hit done and then save. And now you can see here that the new text is added. So if you want to add any more specific text to any of your inputs, that's how you add some like help text to any of these things as you go. Okay, so those are all good to go. All right, so what's left here for the monitor automation that we have, that one iron condor manager, is we're getting into positions. And if you remember, in this case, what we're doing is we're getting into positions, if you look at our opportunities here, that are 60 days out. So the target is around 60 days. Could be a little bit longer than that because it says at least 60 days. But it could be 75 days, could be 72 days, depending on some trade, but at least 60 days out. It's a very far out position. So what we could do inside the new Iron Condor Manager is we could adjust as the position gets closer to expiration. We could basically adjust the exit options that we use. Remember, the original exit options that we used were pretty aggressive. So take profits at 75% and then start trailing 50% profit by 10%. That's pretty aggressive. So if we wanted to on this, what we could do is we could adjust the exit options if we get closer to expiration. So here's how we do this. We leave the loop in there, which goes through every iron condor position. That's good. It basically pulls down all the information for each position. Then we check and see if the position expires in less than our expiration threshold. So this would really be, this again is a custom input that says, hey, if the position expires in less than 5 days, less than 10 days, less than 30 days, whatever you set at that for that level. If it expires in less than that level, then I want to do something different, okay? And you can see if it does expire in less than that number of days, then yes, start making new decisions or do something different. Or no, it doesn't, just wait. And that's what you want to do. You just want to wait. So you can leave this no branch completely empty and it'll just wait until it gets inside of that level, if it ever does. I don't know. Maybe it'll close a little bit early. So in this case, what it was doing previously is it was checking for a near-term profit and then also checking to see if the position was being challenged. So what I want to do here is I want to adjust and remove this decision recipe because I can reset exit options. Then I can check to see if the position is challenged closer to expiration, because maybe I want to close the position if it's challenged. So what I'm going to do is I'm going to go ahead and delete this. I'm going to keep the no path because I want to keep this decision recipe. And then what I want to do is I want to precede this. I want to precede this with an action, to update the exit options. So if it is less than our expiration threshold, I want to update the exit options for my position. And what I want to do here for the position, and I just realized we can update this for all of our positions, not just iron condors, is I want to add new exit options. Now in this case, I can set the new exit options here, or I can create a custom input, which is what I'm going to do. I'm going to say exit options, I'm going to say near expiration, okay? And now I can choose new exit options to use when the position gets within your expiration threshold, or whatever you set, okay? It doesn't really matter. So when you do that, then you can set some new exit options. All right, so what are those default values? Well, I'm first going to load up the standard ones that we have for iron condor management, or any position that I have, put spreads, etc. I can load up some of those defaults. So I can say like, all right, load up these. Or what I can do here is I can reset those to something lower just manually. So that's what I'll do. Remember, our original ones were set at 75.50 on the target, the activation for stop loss, and then 10. So I can reset these to something closer. Maybe I say 40% of credit on these, and I can use normal smart pricing. Then the trailing stop, maybe I still want to do this, still use a trailing stop, but maybe I activate it at 30% with a 10% pullback. So I'm just kind of inching these back a little bit. I'm still going to set the slippage at 0.04 on this thing. And then the expiration I want to set as 2 hours before. And again, I want to use 0.04 on this. Still want to disable the exit options for wide spreads. And so what that'll do is that if it gets close to expiration, whatever we define as close to expiration, it'll readjust how it's going to take profit. So maybe it was not at 75% or something like that, or really wasn't quite there. But if now when it gets inside that day, if it's at 40%, it's going to take it. And if it's not, it'll start trailing it, and then it'll keep going and going. So it's a cool way you can kind of adjust things as you go down. Okay, so I'm going to set these, and then I'm going to save, and then this is what it'll do. If the position expires in less than this threshold, it will first update the exit options, then make a new decision. And this new decision is where you can start to really make some cool decisions around closing the position if it's challenged near expiration, right? If it's challenged near expiration. So that's what we'll do here. First thing you'll see on the left-hand side, though, really quick, you can see it turned red. Because we deleted that one recipe, now we have an unused input. So just for cleanliness sake, we're just going to delete that and remove that particular input. All right, so now what we're going to do is we're going to go here into this one, which is this decision recipe. And this like whole concept here, I guess, was that after you get inside of a certain number of days until expiration, which this can be subjective, of course, then you update your exit options, but then you're also going to check and see if the position is challenged. Now, if you do not want to close the position when it's challenged, then don't add this. You can go and delete it, you can remove it from the automation, you can add a different automation, you always have the control to do it. But this is basically checking to see if the position is challenged. So if you have, let's say, an iron condor position that has this, payoff diagram, this would be when, say, like the stock starts trading above your short call strike. So it moves from some center point that you had when you originally entered the position, right? Because it was super neutral. Now the stock is trading above your short call strike, which is here. Or the stock is trading below your short put strike, which is here, and now the stock's trading way down here. So is the position's underlying price above the short call strike, or, because it can't be in two places at one time, or is the position's underlying price below the short put strike? So this is a grouped decision that's essentially checking to see if it's challenged on either end. And the reason that you might want to do this, and you might not want to do this, it's totally up to you. The reason you might want to check this and then close a position early is to remove a little bit of that assignment risk. So if your position is challenged and there's 3 days to go until expiration, well, you might want to close the position to remove the assignment risk. Some people are totally cool holding the position all the way. You can do whatever you want, doesn't matter. It's up to you, it's your choice. But this is what this recipe is doing. Is the position's underlying price above the short call strike, or is it below the short put strike? So in this case, you could, and I'll just change this, is my position being challenged, right? You could throw this position in here and say, is this position being challenged? And if it is, yes, close the position, right? That's what you could do here. All of that being said, I don't think that we should do it this way. So I think the real power of using these monitor automations now is to use them for very specific types of management that you would do that are outside of exit options. So here's what I'm going to do in this one. I know this is a little bit different, but I'm just doing it exactly how I would do it here. I don't think you should do this. I think we should take this same thing, and I think we should build it into another automation. I think we should take this and build it into another automation. So I'm going to delete this. I'm going to delete the close position action because you don't need to close the position. You've already got your exit options. Now what happens is that this automation becomes, actually we got to change one other thing, which is repeat through each type of position that it has, which is going to be any type of position. And we know we're only going to add this to bots that only have short positions, short premium positions. But now what we can do here is we can rename this to something really specific. Like now this monitor automation is something very specific. I think I just hit too many buttons here. Now what we can do is rename this to something very specific, which is something that it's doing right now, which is just updating exit options closer to expiration. That's all it's doing. So we rename this to short premium positions, and you can say something like update exit options closer to expiration. I don't know, whatever you want to call it. Maybe that's too long. Just now we're thinking out exactly what that is, but basically, yeah, you're going to update exit options, or you can say near expiration, update to exit options, short premium positions versus long premium positions, right? Because these are all short premium positions because you're going to update the exit options for credit positions. So you could do something like that. And now you only have two inputs, the days and then the new exit options that you're going to use. And that becomes the new standard for how you update these positions. It's just a completely different way of managing because the regular exit options are already taking care of things like profit taking and trailing stops, blah, blah, blah. Now it's, okay, I just want to update those once I get closer to expiration. So I'm going to run a monitor to check and see if I'm near expiration for any positions. And if I am, then update my exit options to something a little bit different. That's it. That's all you're going to do. So now what we're going to do is set those as our inputs. So your expires in a certain number of days. We're going to say, look, if it expires in, I'm even going to say 10 days or 15 days. Now we're getting close. If it expires in 15 days, then update exit options. Remember, we originally, for this template, we were trading 60 plus days out. So if we get inside 15 days, yeah, I'm okay adjusting down our profit taking levels to something a little bit more, intelligent, and then adjusting when I exit the position. Now, this doesn't do anything for us right now for managing a challenged position. Nothing for managing a challenged position, which is fine. That's okay. Because now what we can do is we can add another automation that is specifically set up to manage positions that are challenged. So we can go into our monitors here. I already have one that I built, which I think is for challenged positions. Yeah, here it is. This one's a short put spread manager for challenged with a challenged exit. So this one, instead of using this exact one, I'm just going to create a copy of it because we already have one. Or you could do this one, Iron Condor Manager with challenged exit. There's a lot of different ones you could do, right? Some of these I'm editing and I say delete to myself, etc. So I'm just going to create a copy of this one. And in this case, what I'm going to do is I'm going to rename this. I'm going to say challenged exit monitor for short premium. Or I can just say short premium positions. And I'll go ahead and save that into my library of monitors as well. So this one has a switch in it, which allows me to turn it on or turn it off. Keep the automation in my bot, which is cool. Keep the automation in my bot, but turn it on or turn it off. And this time what I'm going to do is I'm going to send it down different paths. So first I'm going to repeat through every position. That's fine. Then I'm going to see, is the challenge switch turned on? This is good because this will say, yes, the challenge switch is turned on. I can remove the bid-ask spread thing. Don't care about that anymore because I can use the guards inside of the position actions. Is the challenge switch turned on? Yes. Okay, great. Now what I want to do is I want to proceed this and figure out what type of position am I dealing with. Okay, so now I want to see, is the position type, so let's say, is the position type that I'm looking at, is this a short call spread? So that's the first one. Proceed the yes path. No, it's not a short call spread. Okay, then is this position type, right, and this is where I start building these out, is the position type a short put spread? And you're just asking questions. I mean, it's just literally asking the bot what it basically has. So is the position type a short call spread? Yes, do XYZ. We'll get to that in a second. No, is it a short put spread? Yes, do XYZ. No, is it a Iron Condor? So is the position type right here, is it a Iron Condor? Then I can add that. So now I basically set up the whole logic train, I guess you could say. And so under each of these yes paths, if it's that type of position, then how would you check? How would you check and see if a short call spread is challenged? Well, in this case, you could say, is the symbol's underlying price above, essentially that's what it would be. Is it above, symbol's underlying price above my short call strike? And save that for the other one. Yes, it's above my short call strike. Let's just make sure that's the recipe. Got to adjust this because I was copying it from something else. The position's underlying price is above my short call strike. Okay, if it is, yes, I want to close the position, give it some slippage, give it a little bit of room to slip, close it, and you can tag the position as challenged exit. That's what I would do, something like that, like tag the position. That way you know under what conditions it was closed, and that's it. So now what I do is I do the same thing here. I go to my recipes, positions underlying price. So what position, whatever one got to that point, is below my short put strike. Positions underlying price below my short put strike. Rename the caption. Is the underlying symbol below my short put strike? Yes, it is below. And this is the fun thing about doing this, by the way. I know I'm going through this a little bit fast, but is it below my short put strike? Yes, it is. Close. That's what I want to do. Like, what do I do under the yes condition? Close the position, whatever position I'm looking at. Give it a little bit of slippage if you want to. Doesn't matter. Then you can also tag the position. So right after that, add a tag to the position. Tag the position that it was just looping through as challenged exit. Use something like that. Okay, same thing, right? You're just basically doing the same thing. Close it, then immediately tag it. That's what the arrow means right there. It's just close it, then immediately tag it. All right, so that one's done. Now if the position's an iron condor, now we got to add a group decision. So is the position's underlying price? Remember, now we got to do above my short call strike, or I had a group decision here. The position's underlying price is below my short put strike, and I change this to or. So remember, it's got to be in either one of these. It can't be in both places at one time. Right? The market can't be both above your short call and below your short put strike. It's not possible. So we got to do that. Add a group decision. You can edit the caption here really quick. And underlying symbol above my short call strike or below my short put strike, or whatever you want. You can just say, like, is it challenging my position? Yes, it is. Okay, great. You want to close the position if that's what you want to do. So you want to close the position, give it a little bit of slippage here. You'd also tag the position again. So we're going to tag it, tag the position, whatever one's looping through, challenged exit. Okay, now at this point, we've done a lot. So let me just open up all these things here, right? This is our whole setup that we're doing. First thing that we're doing, close if position is challenged, switch is turned on. Yes? Okay. Is it a short put spread, short call spread position? Yes. Then it goes through the process of trying to close. Is it, if it's not a short call spread, the answer is no, then go through the process of figuring out if it's a short put spread. If it is, close it. If it's not, is it an iron condor? So it only is going to manage short premium positions that are challenged. Now the only thing that we didn't add in here that I would like to add is under what time frame. Like, you would still want to add a challenged time frame to this, because what if the position gets challenged day 59 of 60? Do you still want to close like immediately? Probably not. If you get challenged early in the cycle, it probably doesn't mean that you need to close the position. So in this case, what I'm going to do is I'm going to add another decision recipe here that the position expires in less than a certain number of days, in addition to the close if challenge switch to be turned on. So both things have to be true. The switch is turned on. So if the switch is turned off, it all stops. But the switch is turned on and the position expires in, you can say your challenged expiration days threshold. Okay, so you could say, like, if it's challenged and it's within 5 days or whatever it is. And I would say something shorter. positions within these days to expiration and with the switch turned on will be closed. Positions with these days to expiration and with the switch turned on will be evaluated for closing. Okay. Evaluate to close, because then it's going to check and see, like, is it really actually challenged? All right, so I have a new one, and both of these have to be true. This has to be turned on, and it has to be within our challenged expiration date threshold. Done. Now we can see I have a new input here, so this is exactly how I want this thing to work. I'll go ahead and save this. Here are the new inputs that I'm going to add as I run this as a monitor automation. Close if challenged, yes. I'm going to turn the switch on to close the position if it's challenged, and then you can see I got to update this text because this is what the old one was using. It said close if challenged, and it's an iron condor and 5 days. Well, that's not true. It's just turn it on if you want to assess whether to close the position if it's challenged. So we'll update that text here in a second. And by the way, this is all happening as we do it, so I'm just showing you guys how this process works. No edits, just going through it. So if I see something, I'll say, talk it out and then show you where I update it. And then the challenged expiration threshold, which would close positions that are challenged within 5 days. Okay, so I'm going to go ahead and save that because that's going to add the new monitor automation, which is here. So now we've got our near-term expiration, update to exit options, and then we've got our challenged monitor exit. Those are additional ways that we can monitor the positions. So we don't have to, you could add one or none. You could add this monitor automation to other bots that have short premium positions also. Same thing here. You could add this update exit options to all the other bots that have short premium positions, and then they run an update exit options, okay? So let's go in here really quick. Let's edit the caption for close if challenge. Turn on to close positions if they are challenged and it's within the expiration threshold. Okay? Turn the switch on. Turn switch on to close positions if they are challenged and it's within the expiration threshold. Okay? And we're going to save that. Go back here. You can see now there's new text here for that particular area. Okay? So that's all good. So that is essentially done for these. So what we've done at this point, just to recap this a little bit, we have gone through here, we've updated the Honeybadger scanner, added all the notes in here, updated everything in the scanner. We basically gutted the monitor automations and created two new ones. One that just specifically deals with updating exit options, and then the other one which deals with challenged exit, which is controllable by a switch. So we can turn that on to do it or turn it off to not to do it, okay? The last thing that we're going to do here is we're going to move all of these inputs to the bot input level. Now, you could leave these here if you want to. Maybe if you want to just, leave some here and move some, we could do that. We could probably just start that way and you could see how it works. I like to move a lot of them to the bot input level just so it's done and it's in one place. I can update the whole bot from one place. So right now, if I want to update the bot, I'd have to go into each of these different little settings and I can update the scanner and then I can update the monitors individually, which you can do, and that's totally fine. So what I'll probably do is move some of these to the bot level because I don't need to go into each of these to monitor these. So here's how I do it. So you go into your scanner. The ticker is a really big one. Like if I clone this to another bot, I want to add more tickers to it. Like I would just want to quickly swap out the ticker. So I'm going to create a bot level input for the ticker, and you can call it master ticker used throughout the bot. And it is, because it's the one ticker. That one input is used all over the place for the ticker symbol. So if you change it one time, it's used every place else. So you can say something like master ticker used throughout the bot. Okay, save that. And now that becomes one bot level input. Now again, inside of your scanner settings, you now have a bot level input. Just like inside of your automation, you could have an automation input. If I save this, now you can see where ticker flows through to. Now ticker is down here, and now it becomes something that you can adjust right here inside your bot. You can just update the master ticker, and now it gets updated everywhere. And when you go to clone this bot, now it also is here. So you see how creating a bot level input means it's now a setting when you go to clone that you could now use as that setting, that one setting. So you make one change to it, now changes the whole thing for everything that the bot is using. Okay, so if you want to do ones for the RSI levels, you could do that too. You could do exit options, you could do your pops, you could do all that stuff in here. Same thing with these. You could move all of those to the bot level if you want to. Actually, I'm going to keep this one pretty simple, and I'm just going to use that ticker as the one input. And then in the more advanced version that I do later, we can move everything, because we'll move up some premium positions, all the expirations, the deltas, everything. Okay, we'll move all of those up. Last thing I'll do in here, and you can do this or not, doesn't matter. I would just reduce this down to a position, because you just want to trade one direction at a time for the Honey Badger. So it's trading one ticker, so you just need one position per day, one at a time. So you don't want to get into a new position today, then the exact same position tomorrow. Nope, you just want one position at a time, so you can control that right here in the safeguards. Control it with the position limit. Okay, so I think that's pretty good. The other ones are all good here, so you can double check these. These are the profit taking levels with everything. Those are super simple that you can adjust and remove down. I saw this one had the bid-ask spread filter on it, so you don't really need that one because you're just checking for pure profit, but you can now include a little bit of slippage in these if you wanted to. So we'll just update some of these to include some slippage. And I'm just going through and updating them as we go because I haven't actually updated these buttons. And notice I usually say something in my buttons like button equals so I can find it in a list really quickly if I want to. What did I put the other ones as? I put the other ones as 4, 5. So we'll give it this one 5 too. I think I put that one as 4, but we'll move it up to 5. Okay, good. So I think that's pretty much it. Now we have all the automations saved. We've got all of our exit options done. Got our new scanner automation done. All of our settings are saved. I think this thing's ready to go. So I think that's pretty much it. So I'll go ahead and share this one into the community so you guys have a copy of it. I hope this was helpful to go through. I know this took a little bit longer. I kind of belabored a lot of stuff and like really talked out a lot of, you know, how things work and how we're updating it and kind of showed you. But I hope it really did help kind of walk through the process of just like taking a bot that maybe is a different bot or a different use case and kind of updating it, improving it, rolling in some new features, thinking through processes, how to split things out into 2 different monitor automations. I hope you guys really enjoyed this one as always. So if you did, let me know, give it a thumbs up, share it, etc. If you have any questions, let me know as well. And until next time, happy trading.